Hey, it's your Papa Bear. I'd like to take a minute to introduce you to Jason Sue, Chief Investment Strategist at Sowell Management. I think you're going to like him just as much as I do.
So, Jason, so great to see you. I've been studying the Sowell Visionary strategies, and I've been looking for a way to implement them and to use them to my clients' benefits. And I really thought this would be a great way to allow me to introduce clients to you. And so, thank you again for taking time out of your schedule and joining us this morning.
Dan, thank you for having me.
So before we jump into business stuff and portfolios and all that nerd stuff that you and I love, tell me something about you. Just who are you? What kind of things do you enjoy? What kind of things do you do when you're not at work, if there's such a thing? Because it looks to me like you're always at work.
Dan, I'm lucky in that I do what I love. I love what I do. So it feels like
Sure.
I'm always at work. It's also me always doing something I enjoy. So first and foremost, I am a educator. My career started as a professor at a B school teaching finance. And frankly, today, it's not all that different. Just my classroom sort of broadened, right? It's broadened to the Sowell platform. My students are
Wow.
Sowell advisors clients. I spend a lot of time talking to high net worth clients of advisors and just sharing with them what I share with CFAs and MBA students in my classroom.
So tell me something about UC. You're a professor at UCLA, and what do you teach?
I teach finance. I teach quantitative finance and really just broadly everything finance, asset pricing.
And specifically, there's something called a master's in financial engineering. I see that degree on a couple of people that are on your staff. I didn't realize you teach the class.
I teach the class, yes.
So, what does someone do with a master's in financial engineering?
So, it's now become a lot easier for people to understand what a master's in financial engineering actually does. So, data science, of course, is huge, right? You think about AI. AI is all about training the computer to do what humans can do by giving you it a lot of data that a human would digest to make decisions. That's what a MFE, a financial engineer, does. It's really building models, right? Think of that as sort of building models as sort of teaching computer how to think, and then feeding those models a lot of data. So with data, it can start to recognize true patterns that predict future share prices. And so really masters in engineering is a lot of data processing, a lot of model building, and a lot of training machines to replicate what a great portfolio managers can do.
So, does well, machine learning means not necessarily that the machine is learning, but you're teaching the machine and then it can take off.
That's right. So, machines are like little kids, right? Like they don't naturally want to learn. Right? You kind of have to, you know, teach it some framework and then encourage it and then feed it data. So they do grow if you teach it the right things and give it enough data, they do grow and then make better decisions. Just like children, right? Like it is actually kind of weird, but
Wow.
there is an analogy there.
That's amazing. So let's move now to the Sal Visionary portfolios, which are built by Goldman Sachs and primarily managed by Goldman Sachs. Can you tell me when you've met with Bill Sowell, and you're the at Sowell, you're the chief investment officer. When you met with Bill and wanted Goldman Sachs to design it and build it, tell me some of the why and the who uh, behind that decision.
Yeah, absolutely. So first of all, like there's a problem that we want to solve, right? We do see a pain point, which is, advisors are really trying to do two jobs, right? One is, of course, managing client relationships, like holding their hands through the tough times, and then right now will be one such time, right? Like you got the conflict in the Middle East, you got really high oil prices and really high stock prices. It's kind of scares people. People are on edge, right? You need to hold their hands through these turbulent times. But then advisors are also what trying to figure out how to invest, right? These are two very different trainings. And what we've seen from the data points we see both on the Sowell platform, but also elsewhere is if you allow advisors to focus on what they're naturally best at, right, which is to manage a client relationship, to help clients stay the course, do the right things. You let them focus on that, then you got to help them out with the investment side. And the
I
best,
love people. I love people more than numbers. So
yeah,
I
yeah.
do love to study it, but I'd rather you do it.
And so by creating a portfolio that investors could look at, and the advisor and his client would say, well, that's a great portfolio. It's managed by really competent people that I can trust. So I know I got that taken care of. Then let me focus on helping the end clients understand markets and build a relationship, right? So uh, we of course selected Goldman Sachs. It's you know best in breeds in terms of the investment prowess, the resource the organization has. And of course, that brand conveys confidence and competence, right? So selecting and partnering with Goldman Sachs brings you all of that, right? True capabilities and a brand that just naturally puts the advisor and the end client at ease. And of course, the partnership with Goldman Sachs is that a lot of the within the model are the smart beta products that Raylian has created. And then I'm best known in industry for basically in inventing smart beta as a concept and proliferating some products that outperform. And so it's a beautiful
Time out there
partnership.
for a second. Time out there for a second. I'm sorry, but you're the founder and CIO of Radiant Global Advisors, and why does that add a unique flair to what Goldman would be doing if it didn't have you as part of the package?
Yeah. So both Goldman and Raylian are really bought into the concept of, uh, factor investing, both at the asset allocation level and also at the market access level. So, well, let me kind of tell you, Dan, a little bit about what my career is built on. So, I was one of the very first people to say, look, when you look at the S&P 500 during the tech bubble, right, where the S&P 500 became basically just Cisco, right? It was just Cisco and
Oh,
AOL, and you know how that ended, right? So I said, look, you can't just trust the S&P 500, right? Some human intelligence would be good to apply, right? Like the U.S. economy is more than just two stocks, and those two stocks can go crazy and become the entire index, and that'd be bad for you. So I came up with the idea of like, don't just dumbly use market cap to build your S&P 500 index and treat it as the end all and be all. But you want to apply some intelligence, so you want to use the broad underlying fundamental of company as a way to build the index. And so I created fundamental weighting, and that became hugely popular. I mean, it grew over the span of the next 10 years from zero to about almost $200 billion that were then tied to that concept. And then I became well known in the industry for RAFI fundamental index, and we had Schwab, Invesco, FTSE, Russell, all licensing that to create products. And so, that there's sort of credibility and also a methodology that people come to trust. And we're kind of repeating that with AI, right? Like, the S&P is today just seven stocks and it's basically just one concept, AI, right? What if that's a bubble? What if that pulls back in some very, very significant way, right? And so this, again, applying this multi-factor concept just means you don't want to get too concentrated into one concept, right? You want to make sure there's broad diversity, that you're benefiting from everything that drives the human innovation, the future growth potential. And so using that to replace the S&P 500, to replace the MSCI emerging markets is, I would say, some the best practice, right? Some of the best and brightest people in the industry endorse that method. The institutions embrace that method. So, Goldman Sachs also very much believe at the allocation level, right? The world shouldn't just be buy U.S. stocks and U.S. bonds, even though that's worked well. You kind of go, but U.S. stocks is relatively more expensive. Um, we had a bout of sort of bad U.S. fixed income performance, and U.S. fixed income stocks are now so correlated. Like you want to be exposed to other factors of global growth, other factors that pays you a good risk premium. And so we're bought in philosophically into kind of the same concept. Goldman Sachs is executing that at the portfolio level, and then we're executing that in the ETF instrument level.
my goodness, I'm taking so many notes. Um, you can't miss the future. Even if the PE ratios are not, they don't make sense. You have to own the future. And you said, but what if it's a bubble? So how do you do both? And what you're trying to do is structure a portfolio that's not just limiting yourself to AI.
Yep. So it is about rebalancing, right? So you are absolutely right. The future is AI, just like the future was the internet. Even in 1999, when you saw Cisco at some just crazy valuation, you say that can't possibly make sense. You still wouldn't dispute that the future was going to be the internet, right? So it's about, but the internet isn't just one company, it isn't just Cisco, right? If you looked at it, you kind of go, okay, Cisco is hardware, and hardware is important because before the internet is going to work, we got to wire the entire world, we got to wire every apartment, every home, and hardware is going to be the first one to really benefit. But then you kind of go, but who makes hardware? Like most hardware is actually made in Asia, right? Cisco may have a lead, but very soon the Koreans, the Taiwanese are going to catch up. The Japanese already got competing products. Margin is going to come down, and actually Asia might actually get the larger piece of the pie. And so at that point, if you bought into EM Asia, you actually would have done better the next 10 years. The front end of the internet revolution was all Asian hardware, and EM Asia outperformed the US by 10 percentage points per year. So it's really recognizing the future and then rebalancing your portfolio into the right theme, the right part of the cycle.
Wonderful. Wonderful. Well, again, I'm just so happy to have you on Team Sowell, and where it's appropriate to add you to Team Rivers, and put you to work for some of my favorite people that I love, and that's my clients. Again, thank you for your time this morning. I really appreciate you.
No, thank you, Dan. We appreciate you, and we're always available to you, your advisory team, your clients, because there's nothing I love more than being an educator.
I hope you enjoyed meeting Jason Su. I'm really impressed with this guy, a real pioneer in the industry. If you think there's a possibility that Jason Su and the team he's built and the strategies that he uses should be part of your portfolio, maybe we ought to start a conversation. My website is in the comments below. That's the best way for you to reach out and for us to connect. I look forward to hearing from you.